Tesla Motors, the electric mobility giant that revolutionized the automotive industry, finds itself today at a critical crossroads that tests not only its financial resilience, but also its very identity as a company. Although Tesla has survived near-bankruptcy moments in the past, notably during the problematic production phase of the Model 3, when Elon Musk admitted that the company was on the brink of bankruptcy due to complications with its automated production line, the current scenario presents a convergence of potentially more dangerous threats. Tesla is not facing just a single existential challenge, but rather a perfect storm of financial pressures, market erosion, intensified competition, and leadership issues that, together, could compromise its future in unprecedented ways. Tesla's financial landscape in 2025 reveals alarming signs of deterioration. The company's stock has plummeted 30% since the beginning of the year, positioning it as the second-worst performer in the S&P 500 index. This decline represents a dramatic reversal from the meteoric appreciation experienced between 2020 and 2022. More concerning still, Tesla shares have fallen for 7 consecutive weeks, marking the longest period of losses since the company went public 15 years ago. Since its peak of nearly $480 in December 2024, Tesla has suffered an impressive loss of more than $800 billion in market value. Analysts from renowned financial institutions such as Bank of America, Baird, and Goldman Sachs have revised their price forecasts downward, citing concerns about declining vehicle sales and the increasingly competitive environment. There are reports that Tesla risks bleeding cash in the first quarter of 2025, with experts suggesting that the company could become free cash flow negative due to weak sales performance and heavy investments in automation and robotics. Perhaps the most urgent problem faced by Tesla is the dramatic decline in global sales across all its major markets. After recording its first annual drop in deliveries in 2024, the company continues to face significant obstacles to growth in 2025. The numbers are alarming. In Germany, Tesla's sales fell 59.5% in January 2025 and an impressive 76.3% in February. In Australia, deliveries decreased by 65.5% in the first 2 months of 2025. The European market as a whole saw Tesla's sales fall by more than 45% in January. Meanwhile, in China, one of the company's most crucial markets, February 2025 sales fell 49.16% compared to the same period in 2024. These declines are particularly problematic because they are occurring in a context of increasing general adoption of electric vehicles in many of these markets. In Norway, for example, Tesla's sales plummeted 44.4% between January and February 2025, despite the overall electric vehicle market in that country having grown by 53.4%. Tesla's position as the undisputed leader in the electric vehicle market is increasingly threatened by a range of competitors. Traditional manufacturers and emerging Chinese electric vehicle brands are strengthening their presence in Europe and other markets. In a particularly significant development, Chinese manufacturer BYD outsold Tesla in the last quarter of 2023, marking the first time Tesla was outpaced in sales of exclusively battery-powered vehicles. The competitive landscape is especially challenging in China, where Tesla faces local manufacturers offering comparable or superior features at lower prices. Goldman Sachs analysts noted that Tesla is facing a challenging competitive landscape for FSD in China, where major competitors typically include autonomous driving features without requiring a separate software purchase. Tesla's product line is also beginning to show signs of obsolescence, contributing to its market challenges. With no new model introduced in Europe since the Model Y in 2021, industry experts have commented that Tesla's offerings are looking a bit samey. This product stagnation occurs at a time when competitors are rapidly introducing more innovative new models. Additionally, the company faces production challenges with its Cybertruck, with projections suggesting that Tesla may deliver only about $250,000 units by 2025, despite having received more than 1 million pre-orders. This highlights the difficulties Tesla faces in scaling production of new and more complex vehicle designs. Security and safety concerns represent both reputational and regulatory risks for Tesla. At the recent Puntuon hacking event in Tokyo, researchers discovered 49 zero-day vulnerabilities, including a 2-vulnerability exploitation chain in Tesla cars that could allow an attacker to take control of the onboard infotainment system. Similar vulnerabilities were found in Tesla's charging infrastructure, with researchers remotely hacking Tesla's wall connector. Tesla's full self-driving FSD system, a cornerstone of the company's future technology roadmap, has also raised safety concerns. Analyst William Stein test drove FSD 3 times and reported that on each occasion, the vehicle performed unsafe or illegal maneuvers. Research has found that drivers become complacent with autopilot engaged, sometimes engaging in critical safety behaviors such as hands-free driving or even sleeping at the wheel. These safety issues could potentially lead to increased regulatory scrutiny or legal liabilities. Elon Musk's activities outside of Tesla, particularly his political involvement, appear to be affecting brand perception and sales. There are growing signs that CEO Elon Musk's political endeavors are scaring off potential customers. Tesla's stock has fallen for 7 consecutive weeks, a period dating back to the beginning of Musk's involvement with the Trump administration. In Europe, Musk's political statements have been particularly controversial. He has supported far-right figures and parties, including imprisoned activist Tommy Robinson in the UK and the AfD party in Germany. Industry analysts suggest that some car buyers may be taking a principled stand on Musk's political interventions by avoiding Tesla vehicles. Tesla's financial fundamentals show worrying signs of deterioration. The company's automotive gross margins have contracted significantly from a peak of 29.2% in the fourth quarter of 2021 to much lower levels in recent quarters. This margin erosion has led to a substantial decline in earnings power. At the beginning of 2023, Tesla was expected to earn $8.50 in earnings per share in 2025, but now the forecast is only $2.85. As it stands, Tesla risks seeing its gross profit per vehicle fall below $5,000 in 2025 unless it can quickly reduce production costs. Despite the stock's decline, it remains relatively expensive from a valuation perspective, with a forward price-to-earnings ratio still in triple digits. This combination of declining financial performance and high valuation expectations creates significant downside risk. Unlike Tesla's previous near-bankruptcy situation, which originated mainly from production problems with a single model, the Hoxias company now faces a multifaceted crisis involving declining sales, intensified competition, margin erosion, and brand challenges linked to its controversial CEO. The interaction between these factors creates a potentially existential threat if not effectively addressed. For Tesla to maintain its position and avoid a severe slowdown, it will need to refresh its aging product line, address declining margins, rebuild consumer confidence in key markets, and potentially re-establish clearer boundaries between Musk's political activities and the company's brand. The next 12-24 months will likely determine whether Tesla can recapture its growth trajectory or will face a prolonged period of contraction in an increasingly competitive global electric vehicle market. For a company that completely redefined what it means to be an automaker in the 21st century, the path ahead will require not only technical innovation, but also managerial wisdom and strategic adaptability. The question is no longer whether Tesla will continue to be a significant player in the electric vehicle space. It certainly will be. But whether it will maintain its status as a visionary pioneer that defines the industry's direction, or will be relegated to just one among many companies in an increasingly crowded market. It's a transition that reflects the very maturation of the electric vehicle sector that Tesla helped create, but could leave the company struggling to maintain its identity and relevance in a world where its unique approach is no longer so unique.